copy trade. We copy trade.
Good day to everyone joining us from around the world. Whether you're just waking up, my way through your trading session, and winding down for the night, welcome. On behalf of the Detroit WeMasterTrade team, we're truly pleased to have you here with us for a global live stream session. My name is Helen, and I will guiding you through the exciting 2-hour journey as your host. And today's live stream is not just a presentation, it's a conversation. It's a window into the engine room, one of the most fast-growing and forward-thinking funny trading firm in the industry. And of course, I'm not here alone. I'm just by two remakers who have shared with WeMasterTrade represents today, skill trader, mentor, role model within our community. First, let me introduce the other composed always in cipher, Brian. Welcome, Brian.
Oh, thank you so much, Helen. Hello, everyone, and thank you for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about trading strategy or rules, but about the full ecosystem that WeMasterTrade offers, from how you start, how you grow, to how you earn. This is the kind of platform that doesn't just fund trades, it builds traders.
Absolutely. And next to him is someone who brings sharp, analyze and clarify to every chart and conversation. He's strategic, he's sharp, and he's sure for in our trading space. We welcome Hidden.
Thank you, Helen, and hello everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is that we are going to unpack everything, not just what WeMasterTrade offer, but how traders can truly take advantages of each part of our system, from packages to promotions to scaling and long-term profit sharing. If you have ever had questions or even doubt, today is the day to ask them.
And that's exactly what we're here for. Whether you're brand new to WeMasterTrade or already part of our funded trader program, today LiveStream is going to give the full pictures, not just a highlight reel. Over the course of session, we're going to walk you through what WeMasterTrade truly is, what we believe in, how our program are designed, and why we're doing things different from traditional broker or broker firm. And now I want to be clear, this isn't about the sell, this is about the understanding. We want to know what you're signing up for, what kind of structure support your journey, as how you can scale that structure to not just succeed but scale.
And speaking of structure, we will begin by sharing the story behind WeMasterTrade, how we were as a funding project, not a broker, which is a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk of them, and share profit only when you do well. That's the foundations.
Exactly. And from that philosophy flows everything we offer, especially our trading packages, which we'll be discussing in detail. We explain the logic behind each one, what kind of trader they ever looked at, our package, and thought, which one is right for me? Today we'll answer it.
And more than that, we also do like comparison between packages. We will break down pricing, account size, maximum drawdown, consistency rule, and even payouts side by side to help you make a fully informed decision. And wanting to see number on the website is another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is always, how do I stay compliant while trading? So we will move naturally into discussing trading rules, which honestly is one of the most important parts of today's session. And we will explain what the daily loss limit is, how it's calculated, why it includes both close and floating P&L, and how to avoid violating it, especially overnight. We will go into the maximum total loss, the consistency ratio, and we will even address common misunderstandings about trade sizing and risk per trade policies.
And we won't just explain rules in isolation, we'll explain them in the context of live trading decisions. I'll share some personal example of mistakes I made when I first started trading under funded conditions and how I adjusted. Because rules aren't meant to restrict you, they are there to protect the integrity of your growth.
And so while we're on the topic of helping you succeed, we will be guiding you through our current promotion plan, including limited time discount codes, trader support campaigns, capital opportunities, and how to properly qualify and submit group. We had some amazing response to our promotion, but also some confusion. We will have been showing you exactly what to do step by step.
From there, we will transition into a discussion on our scale-up plan, which I personally think is one of the most underrated parts of WeMasterTrade offerings. Many people don't realize it, but we have a structural growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit-sharing model. This is the heart of what makes us different from our other prop firms. When you trade on a funded account and generate profit without breaking rules, we share that profit with you up to 90%, but there's more to it than just the percentage. We explain the full payout cycle, threshold, and timelines today.
And now, I know many of you watching today aren't just a trader. You're also educator, influencer, or people with large network. That's why we are also taking time to explain our affiliate program, and we will do it transparently. We'll walk you through how commission are calculated, how affiliate referral are tracked, and more importantly, what you need to qualify for payout, including a detailed explanation up to referral rule and medium trading condition.
This is especially important because we want all our partners to feel confident and clear about their earnings. We have seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting risk responsibility, understanding the terms, and building long-term income streams.
So as you can tell, this is not just a server level live stream. We are diving into everything: packages, roles, promos, counterparts, profit sharing, and affiliate opportunity. Always one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And we want this to be interactive, not just informative. So if you have a questions at any point, please drop it in the chat. Our moderators are watching, and we'll answer as many questions live as we can. Your voice does matter.
And if you are watching this on replay, don't worry. We will leave timestamps and summarize below, and you can always reach out to our teams with any follow-ups inquiries. Our support team is incredible, and they really care about helping traders succeed.
To wrap up this welcome, I'd like to say that WeMasterTrade is not just a platform, it's a commitment to build real trader, to create fair structure and people around the world who are serious about trading as a professional, not a game. So if you're here to grow, to understand, and to take action, you're actually where you need to be. Let's dive into the journey together. Okay, let's begin once again. Welcome to the WeMasterTrade live stream. And thank you once again for being with us today. Now, before we dive into the packages, trading rules, and promotional mechanisms, we want to take a moment to zoom out and offer you full picture who WeMasterTrade really is, what we believe in, and why we built this platform back that way we have before. Because when you're putting your trust and your trading into a company, understanding the philosophy isn't just helpful, it's essential. And so the next segment is about origin, intention, and impact. It's about how WeMasterTrade began, what value underpin the firm, and how those values translate into real truth and come out for the trader like you. And to walk through that, I'm choice as always with by two people who live and breathe their principle, Brian and Hayden. Let's start with at the beginning.
Thanks, Helen. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many prop firms or brokers that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital regardless of their background, location, or financial situation. We were founded in 2002 as part of the WeMasterTrade Group, headquartered in Vancouver, Canada. While WeMasterTrade builds names on signal sharing, investor networks, and copy trading tech, WeMasterTrade was designed to serve a more focused vision to identify, support, scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to note, WeMasterTrade is not a broker. That's not just a label, that's the fundamental difference. We don't profit from spreads or commissions. Our success is directly tied to the success of our traders. That's why everything we have built, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk, we give you the roadmap, you bring the skill. But we also know that skill alone isn't enough, which is why one of our founding principles is education first. We don't want traders to blindly follow rules, we want them to understand the logic behind the structure. That's why we have invested heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, with course ranging from introductory trading and psychology all the way to advanced risk capital and multi-asset strategy design. The Women to Trade Academy isn't just the theory, it's about implementation. We designed the curriculum to match the real-world trading environment within Women to Trade. So what you learn, you can apply directly to your funding account. And to ensure that our system and content meet global standards, WeMasterTrade is probably hold an ISO certification. We confirm that our educational product and trader development program meets prestigious international criteria for quality, structure, and learner engagement.
That certification is a big deal because it shows our long-term commitment to developing traders, not just collecting fees. In an industry where many so-called prop firms come and go, WeMasterTrade has positioned itself with real operational stability, compliance framework, and internal accountability. We're not here for a reason. We're here to help build careers.
And we have seen that commitment translate into real stories. If you visit our testimonial pages, you will find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all talking about how WeMasterTrade helped them not just earn more, but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. We have had students to become full-time traders. We have had women re-enter the finance world after career breaks. And we have had young professionals from underbanked regions finally access the markets with the funded account. That's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog section where our team of experts and educators share quickly insights, trading psychology breakdowns, market reaction, and platform updates. We believe that learning never ends and we keep our trader informed. But let's talk about the culture. What makes WeMasterTrade different isn't just the product offering, it's the community mindset. We actively promote trader integrity, respectful competition, and knowledge sharing. Whether you are in a Telegram group, watching our YouTube series, or engaging with us on live support, you see that we actually listen. And now speak honestly here, in many platforms, the trader is just a customer. At WeMasterTrade, the trader is the product. Your performance drives the business. Your voice shapes the platform, and your consistency determines how far we can scale together. That mutual accountability is rare, and it's something we're proud of.
And if you have ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonial. Take a look at our funded accounts and connect with people who have gone through the system. The stories are real, the capital is real, the results speak for themselves.
And to summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education for trading institution. We are here to challenge the status of trading asset, to build systems that reward performance over promotions, and to create a real scalable income opportunity for traders around the world, rather than up their starting point. This is more than the broad firm. It's a trading movement, and if you're ready to be a part of it, today's live stream will show you everything you need to know. And thank you, Hidden and Brian, for that deep and honest walkthrough. Coming up next, we're going to take the foundation and connect it directly to our actually offering. This means we will be discussing all different account packages available as WeMasterTrade, how they differ, who they are designed for, and what kind of result you can expect from it. And now that we explore who WeMasterTrade and the principle we stand for, it's time to move into one of the most essential parts of this live stream, an in-depth discussion in our account packages. This is where it all began for most traders, choosing the structure that's the best aligned with their goals, their story, and their current skill level. And when we say packages, we're not just talking about dollar figures. We talk about frameworks, a package, we want to try represent a different pathway to our growth. And today will walk you through all of them, or what they offer and their structure, and more importantly, who they design for.
Exactly, Helen. At WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we build two distinct product lines for traders, the Challenge Package and the Instant Funding Package. Each line includes a variety of account size and configurations because we know that traders come with different strengths, risk appetite, and timelines.
Let's begin with the challenges model, a two-phase evaluation system built for traders who want to prove their skills before being allocated capital. Its structures fair and has become one of the most popular routes for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulated account and your goal is to meet specific profit targets while staying within strict but reasonable risk parameters. There are 3 stages in total, phase 1, phase 2, and then the funded stage.
Take for instance our 10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a trade record. Let's break it down phase by phase.
In phase 1, you need to achieve an 8% profit target, which is $800 without reaching a 5% daily loss, $500, or a 10% overall loss limit equal to $1,000. You have unlimited time to achieve this. That's a key difference from many prop firms. We don't pressure you with deadlines.
Once you pass phase 1, you will move to phase 2, where your profit target drops to 6%. That's $600. The risk rules remain the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, once both phases are clear, you enter the funded account where you trade with real capital, have no profit targets, and your profit share jumps to 90%. That's one of the highest in the industry.
So who is the $10K challenges best for? This account is ideal for newer traders or experienced traders who want to start with lower pressure and learn the system. If you are still refining your strategy or want to get a feel for WeMasterTrade risk framework before scaling, this is the perfect packages to begin with.
And now for those who are confident with their strategy and want to start with the larger account size, we offer 25,000, 50,000, and 100,000 challenge packages. The structure is similar, 2 phases, the same 5% daily loss and the 10% total loss limits, but the profit target scale proportionally.
For example, in the $50,000 challenge, you need to hit $4,000 in phase 1 and $3,000 in phase 2. While the targets are higher, the leverage remains the same, 1 to 100, giving you room to adjust position sizing.
So who are the mid and high tier challenges best for? The $25K to $100K challenges are ideal for traders with more capital management experiences, especially through looking to eventually scale into larger funded accounts. If you have already passed all the prof challenges or have a strong verified trading history, this is a good step up.
And every challenge packet comes with a one-time fee. For example, just for $45 for the 10,000 challenge. The fee is refundable once you become funded and meet minimum performance condition. And if things don't go your way, you're eligible for the 30% reset guide to start at. And what if you don't want to go through a challenge at all, but instead want to access the real capital immediately and get passed by perfect on results? That's where our instant funding packages come into play.
And this is where WeMasterTrade truly sets itself apart. Our instant funding model is designed to give experienced, disciplines traders the chance to trade real capital from day one. No evaluations, no demo stage, just pure live trading backed by a structured, fair, and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, preferences, and goals. Today we're going to walk you through each of the 5 main instant funding packages: standard, 51010, 510-0, 51010 no PC, and customized. We'll compare the detail, but more importantly, we'll help you figure out which packet is right for you.
And let me set the scene quickly. All of our instant funding packages give you live trading access from day one. That means no challenge phase, no evaluation. You pay one, follow the rule, and you trade in like capital. And everyone account no matter the size in full. No time limits. Up to 90% profit share, scale up plan to 1 million. Support for EAs or swing trades, scalping, and even SFT. Oh, and now let's go pockets by pockets. And as we go, Hidden and Brian, I want to jump in with the real advice. Who should actually choose which one, and what type of trader you've seen succeed with each?
Let's start with the standard package. I always describe this one as the best brand for traders who just want stability. You're getting up to $200,000 in capitals with a very manageable 4% daily loss limit and 6% overall limit.
It's like that calm, steady account that doesn't push you to overtrade. And with the profit split up to 90%, there's serious earning potential even if you are taking a slow and steady approach.
And how about the commission?
Competitive across the board. Forex at 4%, $4 per lot. Gold at $4 per lot. Indices at $0.5 and stocks at just $0.07 per lot.
And everything is allowed. News trading, scalping, weekend holdings, EAs, HFT, you name it.
So for the audience, if you're someone who trade regularly, understand your strategy, and want a full range of assets, you plan to play a long game within your sweet spot.
And it's perfect for intermediate to advanced traders who already know their edge but don't want to stretch with the target-based challenges. And if you have ever had an account blow due to unrealistic rules, you will find the standard model refreshingly fair.
I also say it's swing traders. The 4 or 6% risk profile gives just enough flexibility to hold multi-day positions, especially weekend holding fully allowed.
Alright, so moving up a gear, let's talk about the 5% package. Same capital ceiling up to the 200,000, but now you get the 5% daily loss and wider 10% overall limit. Why does that matter?
That extra cushion is massive for traders who scale into positions or take multiple entries per setup. You have got more room to breach, especially in high volatility markets.
And the profit target here is also 10%, which aligns well with the risk window. Plus, you still get full support for scalping, EAs, news trading. It's very trader friendly.
And this best for day traders, especially those trading assets like NAS, DAQs or growth that move fast. If you have got a test intraday strategy and just need some risk breathing room, this your packages.
And also for traders who want structure but don't mind having that profit target, the clear milestone motivates some people, especially if they're payout oriented.
And now here are portional favorite, the 510 euro. You get 5% daily loss and 10% overall loss, but no profit target, none zero.
And that's a blessing for high precision traders. You're no longer chasing a number, you're just focused on protecting equity and growing capital slowly and safely.
This one is loved by low frequency traders and snipers. If you enter 3 to 5 trades a week, this your space. You are not penalized for patience, you are actually rewarded for it.
So who's it for? Veterans, swing traders, risk-conscious traders, people who prioritize consistency over speed. If that's you, you thrive there.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale up cleanly. This they hope.
And now for the rule breaker, or rather those who don't want to evaluate this on how even their profits are. The 5-10-10 novice remove rule frequency tracking, right?
Exactly, same 5% risk profile, but you are not required to keep your profit growth smooth.
That said, trade copiers are not allowed in this one, so it's for manual traders only, and you need to trade responsibly. But for aggressive traders who sometimes hit big spike, this is the place.
Which perfect for high risk reward traders and or anyone who's had issues with consistency rules at other firms. You trade how you want. Just keep it inside the drawdown box.
And last but not least, the customer packet. This is WeMasterTrade saying, you know what you need, let's build it together.
You can adjust daily loss, overall loss to your liking. Plus, you can fund up to $400,000 more than any other account.
It's premium, flexible, and comes with all trading style allowed, including EIs, new tradings, weekend holding, HFT, and more. And which for top type professionals, hedge fund traders, signal providers, high volume traders, anyone with a very specific structure in mind. These packages lets you build it.
I always say, if you've tried other models and nothing quite fits, build your own blue ring with Customize. That freedom is rare.
Just sum up, every instant funding package we offer comes with a clear risk parameter, fair commission and deep market asset, and real profit potential. There are no time limits, and the payout starts as early as 1 day in.
And no matter your strategy, scalping, swing, algo, or manual, there's an account that aligns with you. The key is picking the right one now, so you can start building consistency from the start.
And if you are ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dreams. The right fit always outperforms the biggest promise.
And other thing, you will useful exactly how to protect your account, avoid breaches, and understand the key risk and consistency rule that follow our entire platform. Alright, trader. Now that you have seen the packages, let's talk about the part of either make or break your account. That's right, it's time to dig into the trading rule and how to actually stay compliant when you're funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the really begins. And the number one reason traders lose their account is comes down to wanting the daily loss limit.
Yes, no, the greatest daily loss is the one rule traders think they understand until it kicks them out of their account at 3:17 p.m. on a random Tuesday.
But here's the good news. Once you understand it, how it works, really works, it becomes one of your best tools for risk control. So today, let's break it down from top to bottom.
So what the daily loss limit, also called the maximum daily loss?
It's the maximum amount of loss you're allowed to incur in both floating and closed trades on any single trading day. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction, and it's what trips a lot of people up.
Let's work through a live example. Imagine it's the start of day 5. The balance is 105,000. Your equity, however, is higher, 107,000 because of open floating profit.
If you're on a 4% daily loss limit, we calculate off the higher number, $107,000.
So 4% of $107,000 is around $4,000. That means your equity for the rest of that day can drop below $102,000, or boom, your account is gone.
Right, and I think it's important to point this out. The system isn't waiting for growth. It's real time. Even if your trade is flowing loss and you haven't closed it yet, if your equity dips below that threshold for even a second, that's it.
Now let's reverse it. Say it's the start of day 7, your balance is $100,000, but your equity is $99,000 because your open trades are slightly in loss.
Since balance is higher, we base the 4% on the initial balance, so $4,000.
So now your equity must stay about the 90,000 throughout the day. If it drops to the 95,999 after liquidation kicks in, no warning, no margin call.
The system will send a market order to close all trades. Everything liquidates. Your account is disabled and you can't trade again unless you purchase new packages.
And here's the kicker. The auto close happens when the system detects the threshold was crossed. But due to market fluctuations, your final profit and loss might look worse than the actual threshold. That's because the system executes a closure based on price slippage at the time of liquidation.
So even if you only intended to trigger 3,900 slots, once slippers were in gold or nada, and suddenly at 4,200. That's why I say don't write it.
Alright, let's talk about how to avoid violating this rule, because this is where the pro mindset kicks in.
First tip, know your buffer. Never plan trades to take you right up to the edge of your limit. Leave at least 10 to 15% room below the max loss, especially in volatile markets.
Tip 2. Check your equity, not just your balance. I can't stress this enough. Most traders stare at the balance all day, but if your floating loss is dragging your equity, you are heading toward a violation.
Tip 3. Use a dashboard or tracker. Inside WeMasterTrade, we provide with dashboard that show your online loss status. Use them, check them, don't rely on memory.
Also, pause trading after a big loss early in the day. If you've lost 3% in the first hour of London session, maybe it's time to stop and reflect, not try to revenge trade your way back up.
Another big one, trade smaller during news hours. If you are trading gold during NFP with full lot size, you are practically begging to break the daily loss rule. Cut position size and ride post volatility.
What are the top broken mistakes you see when it comes to the daily loss?
Number one, over leveraging. Traders opening positions that are 5, 6, 7% of their account thinking they close quickly. But if the trade turns red fast, it's already too late.
Number 2. Holding overnight without checking exposure. If you hold 3 trades overnight and wake up to a 60 pip gap, the daily loss could be hit before you even open your eyes.
And the trust, assuming that slow trades are or doesn't matter. They are not. Remember, equity includes both closing and close position. The total equity lies in your score.
I always say this to new traders. The daily loss rules isn't your enemy. It's your account's airbag. It's designed to protect you from doing something irreversible.
Exactly. It forces discipline. You can be aggressive, but only within the box. And if you learn to trade inside that box, you will last longer than 90% of the market.
And so one last note, this isn't just about role, it's about the trust we have to from you, because with trust you will manage risk responsibly. The daily loss is there to protect that trust on the both sides. We will explore the next rule after having a short break.
Trade. WeMasterTrade. Trade. 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 Copy Trade. We copy.
Welcome back, trader. In previous segment, we covered the daily loss rule, and if you haven't already clicked that one, you're missing out. But now we move from the daily vary to the absolute vary. We're talking the maximum loss rule, and also at your account stop loss, the line that can be crossed, and not just for the day, but for the entire year of account.
And this is where a lot of traders misunderstand how the rule works. They think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they chip away at their account and suddenly liquidation.
The max loss rule is the last safety net. If the daily loss is your daily seatbelt, then max loss is your airbag. That if that limit is hit, it means the account is deemed unsurvivable under your current trajectory and is closed immediately.
So what is exactly the max loss rule? Let's define it simply. It's the total maximum amount you're allowed to lose across all trades for the entire account. If your credit that is your real-time capital including open trades even drop below the certain percentage of your starting balance, your account is gone, period.
And unlike the daily loss, which resets every day, this one doesn't reset. It's cumulative. You can lose 2% one day, 3% the next, and if your total loss crosses the line, that's it.
And the percentage limit depends on your packages. It's typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you started with.
Okay, let's walk through the current example. Suppose you have an instant funding account with an initial balance at 50,000 and the market loss is 6%, which is 3,000.
That means your equity can never go below $47,000 ever. Doesn't matter if you made $1,000 yesterday, the total loss from your highest point back down to that threshold is what matters.
And remember, this rule includes both closed losses and floating losses. So if you have lost $2,000 in closed trades and you have another $1,200 floating in red, your equity is now at $46,800. That's below the limit. account closed.
And just to be clear, it's not about the net gain or loss of trades. It's about where your equity stands in real time relative to that stop loss floor.
Here's where it gets interesting and a little tricky. Let's say your account grew to $51,000. Congrats, you're in profit.
But your market loss limit is still based on your original $50,000 starting balances. So if your limit is 6%, the threshold is still $47,000. What changes is how much room you have to fall before you hit it.
Exactly. You now have $4,000 in total buffer because $51,000 minus $47,000 equal to $4,000. So your profits give you cushion, but the floor never moves.
Once your equity drops below that maximum loss threshold, even by a few dollars, auto liquidation triggers. All trades are closed immediately at market price.
And again, like with the daily loss, if there's volatility or slippage, your account might close out below that line. That's just execution reality.
And more importantly, one is bridge. That scale is permanently disabled. You will need to purchase a new packet if you want to continue trading. No reset, no rollback.
Alright, let's get tactical. How do you actually trade inside this room without constantly worrying about it?
First, track your total close losses every day. You should always know how close you are to your max loss floor. Don't wait for the dashboard warning. Calculate it manually.
Second, use your profits as protections, not permission. Don't treat floating profit as a green light to increase risk. Instead, consider locking in gains by reducing lot size when you are ahead.
And third, manage your floating loss aggressively. Even if you're positive overall, a single trade with a force stop placement can take you from steady to shutdown in a few minutes.
Fourth, stay cool when you're close. If you're down 5% out of your 6% limit, that is not the time to double down. That's the time to step away, pause, and rethink your entries.
The biggest mistake, underestimating floating drawdown. Traders close 3 loser and think, okay, I have still got room, but they forget about the 4 trades floating minus $1,800.
Second, traders who chase recovery after a bad day, they lose 4% in one day, come back swinging the next day, thinking they'll make it back, and instead take another 2% boom violation.
Third, this one hurt. Ignoring sleeper during major news. Even with a higher score, new candle can grab straight through your limit.
The max loss rule is there for a reason. It's not there to punish you. It's there to protect you from yourself. Every successful trader I know sees their stop loss, whether personal or institutional, as a non-negotiable boundary.
Right, it's a reality check. If you are consistently brushing up against your max loss, the problem isn't the rule. The problem is your system or your psychology.
As WeMasterTrade, we're not just giving capital, we're teaching structure. And the market loss rule is what separates a gambler from the professional. So remember, your market loss is a percentage of your starting balance, typically 6% or 10%. It's calculated using equity not balance. It's includes both flow and floating losses. And one break, your account is gone. And coming up next, we will explore the consistency rule and why steady profit matter more than big trade when it comes to growing, scaling, and getting part.
If you have ever made $5,000 in one day and then made $200 in next 4 days and wonder why your payout got flagged, this next segment is for you.
Let's dive into the rhythm of profitability and how to stay consistent under the WeMasterTrade model.
Alright trader, we talk about the daily loss and we just cover the maximum loss rule, two pillars of protecting your capital. But now it's time to shift your just later and talk not about risk, about the reserve. Because here the thing, it's not just about staying alive in the game. As WeMasterTrade, we want to see traders grow, scale, actually earn. And to do that, you need more than just winning day. You need something called profit consistency.
This rule right here, the profit consistency rule, is what separates a lucky spike from a reliable trader. It tells us whether you can make money over time or if you're just hoping to hit one big winner and roll the dice.
And more importantly, it also how we evaluate if a trader is eligible for withdrawals, profit sharing, and even scale up. So if you are funded and you are wondering why your payout didn't go through, this rule could be the reason.
So let's define it clear. The profit consistency ratio is a measure of how even your profit are from day to day. The more balanced your profit, the lower your ratio. The less consistent, meaning you have one giant profit day and then smaller and losing day, the higher your ratio.
The idea is simple. If 80% of your total profit came from one day, that's not consistency. That's luck or risk. What we want to see is traders who make profit day after day. Even if it's small, that's what we can scale.
The formula is really straightforward. Take your best trading day's profit and divide it by your overall profit since you started the account, then multiply by 100.
The bad day divide total profits, multiply 100 equal to the profit consistency percentage.
And just to be clear, best day refers to your highest close profit in a single calendar day. And total profit is the sum of all your close profits, minus any close losses or open losses across the life of the account.
Let's say you have had the following results over 5 trading days. Day 1 plus $100, day 2 plus $200, day 3 minus $50, day 4 plus $100, and day 5 plus $60.
That means your total net profit across 5 days is $100 plus $200 minus $50 plus $100 plus $60 equals to $410.
And your bad days were day 2, that's 200 profit.
So now we apply the formula. $200 divide $410 equal to 0.4878. Multiply that by 100 and you get a profit consistency ratio of 48.78%.
Now, let's say your account requires 20% profit consistency, which is common. This trader is way above that, so they wouldn't qualify for a payout yet.
And what does this mean? Even though the trader is profitable, they're not consistent enough. They have one big day that make up about half of their total profit. That's not sustainable, and that's what we're looking at.
And this is where I really want to speak to traders. If you're relying on 1 or 2 big days to carry your entire account, that's not professional trading, that's volatility. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluates your consistency over time. Traders who show long-term balance are the ones who get scale up, who get features, who get trust with more capital.
Oh, alright, so let's add the number. What the acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. Let's say you are over the limit don't panic. You are not disqualified. You just need to keep trading and even out the curve.
Here's how to do that. Trade smaller size for a few days, take smaller control wins, and for $200 or $300 days, avoid big swing trades that could spike your ratio again, and then spread profit across multiple days, not one monster setup.
And for those using EAs, monitor your equity curve. If your EA is growing profit heavily into one day, you might need to rebalance it. The course might be profitable, but it's worth hard to show unless it's figured with payout logic in mind.
Mistake one: traders hitting target early and then taking the rest of the risk off. That inflates your best day and leaves the rest of your curve flat.
Common mistake number 2, overtrading after a big day, thinking I'm safe now and trying to squeeze more instead of averaging out that high ratio.
Mistake 3, thinking this rule is just a hurdle. It's not. It's a reflection of what we actually look for our master trader.
So why this rule matters? At the end of the day, this isn't about controlling you. It's about building habits that can handle scale. If you can't be consistent with $25,000, what happens when we give you $100,000 or more?
Exactly. Consistency is what makes you safe to invest in. At WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you are serious about long-term trading.
And we have seen it time and time again. The trader who respect this rule are the one who get multiple payout, referral, and grow into six-figure funding payout account.
So don't fear the rule. Understand it. Use it as a feedback tool. If your ratio is too high, great. That means you have got profit. Now keep going. Balance this out.
And remember, you don't need to calculate it manually. WeMasterTrade's dashboard calculate your profit consistency ratio automatically. You can check it anytime under your statistics tab.
And to recap, this rule is about balance, not volume. And to keep your beta under 20% of your total profit, spread your win across multiple sessions and monitor your progress in the dashboard. We walk through the daily loss limit, calculate the maximum account loss, and examine how profit consistency shape your long-term payout and growth. And now we arrive at the final and perhaps more overlooked rule of all, the risk consistency rule.
That's right. Traders often think the biggest enemy is the market, but truthfully, it's inconsistent, especially in how much you're risking from one trade to the next.
This rule doesn't look at how often you win. It looks at how stable your risk is and how professionally you are managing your position sizing. And if you are serious about scaling at WeMasterTrade, this rule is non-negotiable.
And what is the risk consistency rule? Let's break it down. At its core, the risk consistency rule is simple. You are not allowed to risk more than 2% of your initial account balance on any single trade idea.
And that includes all losses associated with that trade idea, both closed losses and floating losses. Even fees, commissions, and swap are counted.
And for some accounts, like the 510 no PC packages, this rule gets even stricter. There, the limit is 1% per trade idea, not 2%.
Because consistency isn't just about the outcome, it's about rule set. The more erratic your position size is, the more volatile your equity curves become, and that makes you hard to scale.
This rule protects both you and the firm. It helps preserve capital, prevent large equity swings, and make sure your edge plays out over time.
Think of it as your account hit bait. If your position size pulls up and down, 0.5 loss one day, 5 loss the next, the system flags. That's not structure, that's chance.
And what's called as the trade idea? This is where it gets technical, but stay with us. The term trader isn't just one order, it's a group of trades that share the same logic.
If you open free buys position on XIU, USD, gold at different times, that's one trade idea.
Because it's the same symbols, same directions, and close around the same times. Even if you open them at different times, they are seen as a single, unified positions from the risk perspective.
So the system doesn't look at your trade in isolation, it's grouped into them into logical bundle and apply the 2% rule across the entire bundle.
So what's allowed? You can have multiple separate trade ideas as long as each one respects the risk limit.
For example, if you go long with gold, short on GBP, GPY, and short on AUD, USD, and each position has its own distinct directions and asset. Those are three separate trade ideas, and each one can risk up to 2%.
And what's not allowed? Let's say you go buy on gold and then you go buy again and again. You now have a pre-open position in same direction on the same asset.
Yep, the system treats that as one trade idea. So if the combined floating risk and if eventual loss from those positions exceeds 2% of your starting balance, boom, you have broken the rule.
Okay, let's go hands-on. Suppose you have a 100,000 account and the 2% market per trade idea means you can lose more than 2,000 on any trade idea total.
So you open two gold buys, one lot each. You don't place a stop loss. News hits, market drops 100 pips. Each lot loses $1,000 at $2,000 in total.
You are right on the line. If slippage or swap adds a few extra dollars, that is rule broken, account flagged, or liquidated depending on enforcement model.
And once some account, especially in some funding account with a trigger tolerance, this rate may result in loss of funding station or immediate closure.
Tip 1. So pro tip to stay risk consistent. Tip 1. Set your lot size based on account risk, not emotions. Know how many pips equals 2%.
Tip number 2. Use stop loss order religiously. Set them based on risk per trade idea, not random chart levels.
Tip 3. Don't strike trade without calculating combined rate. Just because one position is below 2% doesn't mean trade are up the mark.
Tip 4. Label your trade ideas mentally. If you are entering on the same setup, treat it as one, cite it accordingly.
And tip number 5, if you want to split an idea into multiple entries, do it smart. Scale in smaller, use micro loss if needed. Keep the total exposure below 2%.
And some common violations. The most common reason traders break this rule, stacking multiple entries on one trade idea thinking it's still separate.
Second, opening high-risk trades after wins, assuming they're playing with house money. Spoilers, the market doesn't care.
The third, on that letting floating loss, a trade may be not closed, but floating rate still count toward your 2% rate.
So why we enforce this rule? This isn't just policy, this is professional practice. Hedge funds follow this, banks follow this, real traders follow this.
Exactly. We are not here to micromanage you. We are here to protect your account, our capital, and the integrity of this community.
And traders who internalize this rule, who understand that more consistent risk is the foundation of scalable capital, they are the one with growth. They are the traders who go from the 25,000 to 1 million.
So if you want to be a professional trader, you have to think like one. And professional traders always know how much they are risking on every trade every day.
And if you are still guessing on your loss side or opening trades because the setup feels right, take this at your side, step it out, get structured.
And this is more than a rule, it's a habit. Build it now, and the path to bigger capital and larger scale become way more predictable. And that's, my friend, wrap up the 4 essential rules of trading WeMasterTrade. The daily loss, maximum loss, profit consistency, and risk consistency. Mastery, and you're not just staying confident, you're building the foundation for superior capital management, long-term payout, and scalping. And coming up next, we come to the calendar economic.
Let's move to about the economic calendar. Good morning, everyone. Big data day ahead. RBI, UK retail sales, Eurozone, PMIs, and US CPI.
And yeah, look like a proper Friday. Let's go through one by one.
Starting with the AUD RBI Gov Bunrop speech 7 and 5 a.m. So Ipswich South House case mentions persistent inflation or higher rate growth. AUD could prop.
In 2 was unless she hinted at an order rate hike and inspired my faith. I will wait for reaction for AUD USD around the Euro 65 zone before touching it.
Next, GBP retail sales at 1 p.m. came in at minus 0.4 percentage way below the 0.5 forecast. Thus, weak consumer demand is definitely a red flag for the UK economy.
Exactly, London Open could sell it apart. I'm eyeing GDP USD short as a reset at 1.2200. Maybe a small rate stop about 0.1240.
Then the Eurozone PMIs 2015 and to 3 p.m. still short. France manufacturing at 48.2, Germany at 49.5, or under 50, still construction.
And so Euro not recovering, that may keep EU or USD healthy, especially if US CPI later come in strong. And for any rally toward Euro up 1.0810 to 1.0830.
UK's PMIs at 3 and 30 p.m. Manufacturing 46.6, services 51. Not great, but not collapsing. Shows stabilizations, but the overall sentiment is still weak after retail sales.
Yeah, GDP might about is based on PMI, but also severally. I see more downside pressure on the US CPI at this point.
Speaking of CPI, USD data at 7:30 p.m. is a key today. Forecast is 0.3 core, 0.4 headline, but while rising to 3.1 percentage from 2.9 percentage. That's tricky inflation, which supports the higher for longer Fed stance.
If CPI year-over-year has or bid at 3.1%, USD will rip higher. I will buy USD JPY on breakout and maybe short on gold, but need to manage volatility. CPI move outward.
Finally, US PMI 1845, manufacturing is 51.9, services is 53.5, still in expansions but slowing a bit.
Yeah, if USD already rally on CPI, PMI maybe not move much, but they if surprise stronger could send the USD trend into negative.
So the picture is AUD depends on RBI tone, GBP bearish bias, Euro slightly bearish, and USD strong bias if inflation holds.
Totally agree. Buy USD dip after CPI, sell GDP rally after weak and retail PMI combo. Was grown short in June right again. High stop, small side Friday volatility.
Sounds solid. Let's stay alert around 7:30 to 8:45 p.m. That's the high volatility window.
Copy that. I will ping you if CPI hits over 3.1%. That's our green light for USD strength. And thank you so much to all amazing viewers who chose our live stream today. We truly appreciate your time and support. We hope the live session has helped you gain a better understanding of our company, our trading rule, and the style promotion we currently offering. Your engagement and passion mean a lot to us, and we always happy to connect and share more useful information with our trading community. Stay tuned for our next live stream. We can't wait to see you the next again, bring you more helpful updates and insight, and happy trading.